Welcome to the Canadian Investors course, Introduction. On page 2, the terms of use and disclaimer. We suggest you read them, please. They will appear at the beginning of every session. This course complements Canada's Task Force on Financial Literacy, launched by Canada's Finance Minister James Flaherty on June 6, 2009. We will start with an overview of the course. This introduction, and followed by Session 1, Income Investing, Short-Term Income. Session 2 is Income Investing, Medium and Long Term, as well as preferred shares, the dividend tax credit associated with them, and how to profit from the bond market. Session 3 is an introduction to equities. We'll discuss the capital markets, the stock market, commodities, REITs, and income trusts. Finally, moving on to Session 4, finding stocks to buy or sell. We'll go through the balance sheet and we'll talk about fundamental analysis and ratios, and we'll talk about technical analysis. Session 5 is on the economic cycle. We'll discuss how it relates to stocks and bonds, real estate and commodities, and we'll talk about the yield curve, which is a valuable warning signal for investors. Session 6 is a simple financial planning segment. We'll talk about your personal balance sheet, how much you need, and some of the realities and how human nature interferes with them. Session 7 is the second segment of financial planning. We'll discuss some insurance products, including annuities, and talk about term versus universal and whole life insurance, sheltering money, and some tax strategies. Session 8, the investment industry overview. We'll provide an overview of the industry. We'll talk about who the players are, licensing bodies, and how they get paid. Session 9 is investment industry fees. We talk about investment account fees, investment product fees, and guidelines to help you choose which products and accounts are appropriate for your needs. Session 10, packaged investment products. Here we'll talk about mutual funds, wrap accounts, and ETFs, exchange traded funds. Session 11, it's more on packaged products. We'll talk about some guaranteed income products, so some of the shortfalls and so forth involved with them. We'll talk about closed-end units and structured notes. Section 12 is on options. We'll explain in simple terms how options work. We'll also show you how they can be very aggressive, but also a conservative option strategy and how to generate income with options. Session 13 is on the investment portfolio construction. We'll talk about asset allocation and constructing a customized investment portfolio. Session 14, investment strategies. We'll evaluate a balanced fund or a balanced portfolio and discuss the risks of owning something like this going forward. We'll also talk about buy and hold investing and leave you perhaps with some questions in regards to that. Session 15, investment strategies, rules-based investing. This is a different approach to the buy and hold strategy, using fundamental and technical analysis together, hopefully to provide a consistent, better result with fewer drawdowns. Session 16, measurements. We'll talk about the Federal Reserve and long-term indicators that you should keep an eye on as an investor. Finally, Session 17 is psychology. We'll talk about you, and we'll talk about how you fit with your advisor planner, or how you should fit with your advisor planner, or what to look for so that you can fit with your advisor planner. So, moving on a little bit, what is investing all about? Well, investing involves some level of risk. Investing involves risk versus guaranteed returns in products that supposedly provide guarantees. Investing helps manage inflation. it attempts to grow your money, and it requires knowledge, patience, and discipline, probably in equal parts. So, what are your investment objectives? Well, for most people who are saving for retirement, safety of principal is kind of important. It's something you need to understand how important it is to you. How much are you willing to lose? Income. Do you need income from your investments? Growth. Do you want growth from your investments? Or are you happy to live with guaranteed investments that won't necessarily provide growth in themselves? Do you need liquidity from your portfolio? And if so, is your portfolio able to raise cash easily or switch between investments easily? Are you restricted in any way? Knowledge. The best defense is knowledge, especially in the investment business. The more you know and understand, the more you'll know what people are doing to you and what they're suggesting that you do, and you'll be able to assess it better for yourself. So it's very important to know what you're doing and to know what you own. Finally, access to product. If you, in an ideal situation, you're in a position where you're not restricted from holding the type of investments which would be appropriate for you. What are the risks? Well, there's liquidity risk, interest rate risk, inflation risk, reinvestment rate risk, and if you own securities, bankruptcy risk. So these are factors that you have to take into account when you're investing. Let's look at the risk range. We're going to look at risk from high risk to guaranteed investments. So at the high risk spectrum, especially if you're on the purchasing side, futures and options, especially if you don't understand them, almost unlimited risk. If you do understand them, perhaps managed risk. Common shares in real estate and precious metals are higher risk than preferred shares. Preferred shares are higher risk than corporate debt like debentures, but only slightly. In some cases, that's a little bit muddy. Next, on the safety ladder, getting safer, are GICs, guaranteed investment certificates from the banks. They guarantee you a return of your capital and a set amount of interest. You know what you're going to get. Government bonds are even safer because they're backed by the government, which has the ability to tax to make sure that they can pay them. Money market tends to be very safe, super high quality investments, and T-bills fall in that same category. Your age is also a factor in your risk tolerance. When you're young, you can tolerate higher risk. When you're older, you can tolerate less risk. When you're very old, perhaps you can tolerate no risk at all, unless you're very wealthy. If you have any questions regarding the course at any time, contact your trusted wealth professional. If you don't have a professional helping you with your investments who you trust, contact Jerry Gabon and he'll put you in touch with a trusted wealth professional in your area who you can evaluate and who understands the main features of this course and the main features of investing, and hopefully can help you find a good basis to continue and to flourish. This is the end of the introduction. Thank you for listening.